Hello friends, and welcome to the greatest show on earth about stocks and the financial markets. For those of you that are new here, this is how things normally go. I'm going to say some things, the market is going to do those things, and in return, you'll make some money, I'll get some views, everyone's a winner. So, it's time for me to say some things, hit that like button, and let's roll the tape.
Welcome everybody to the daily recap show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it.
This is the daily heat map of the S&P 500, and US stocks slipped on Tuesday, continuing an uncharacteristic limp to the finish after a roaring year of trading. And guys, it was a very mixed day. We saw improvements in breadth across the board. However, the big boys, Nvidia, Tesla, Google, Meta, Apple, Microsoft, they were red on the day, which meant the market as a whole was red, but we saw constructive price action across the board, particularly if you look at what Tesla did and what the rest of consumer cyclicals did, and pair that with stuff like real estate, which is very green, energy as well. Look at healthcare, certain parts were mostly green, and financials, which really held up the market today. All in all, we saw great breadth, but not that great in the Magnificent 7 trade. But really, what happened today is less important than what happened for the rest of the year, because the final trading day of the year just wrapped up, and what a fantastic day it's been. Large growth was the best performing factor size segment, and this is pretty much how it went this year. Large growth outperformed large core, which outperformed large value. Mid-cap growth outperformed mid-cap core, which outperformed mid-cap value. And in smalls, small-cap growth outperformed small-cap core, which outperformed small-cap value. So really, the place to be today in any of the size segments was the growth segment right here. But really, where you really wanted to be was actually in the large size segment. 28% returns for large growth, a very, very strong year, all things considered. And if you actually look at the individual sectors, the king of the hill was the XLC, gaining 34%, but it was a very rocky road to get there. At one point, financials were the best performing sector for the year, right around this part of the year. But the XLC and XLF both returning in excess of 30%, XLY in close third with 26%, and then we have the S&P 500 gaining 24% for the year. An insane stat. Now contrast that to the RSP, which gained 12.69%, and the IWM, which gained 11.34%. Now, this was almost half the return of the S&P 500. However, this is still greater than the average year in the RSP as well as the average year in the IWM. So regardless, great years for the broader market as well. It's just in comparison, not that great. And that's because these big guys, financials, communication services, Tesla, Amazon, they really held up the entire market. Now, technology, right? Only up 21%, we say only, but that's because we saw some underperformance in Microsoft, and most of semiconductors, which is constructed of this index, didn't really perform well apart from Broadcom and Nvidia. Utilities gained 23%, and every single sector gained here, except for XLB, which actually is a gain, but it still is in red. I just wanted to add some color to this chart, but yeah, a very bullish year, all things considered, particularly in cyclical names. Look at XLF, XLC, XLY, very, very bullish here, all things considered. Now, here are the Mag 7 guys, and we see Nvidia gaining about 180%, the best performing. Now, Tesla was actually the worst performing Magnificent 7 name for most of the year, actually was the second best performing, in close second with Meta. Nvidia, Meta, Tesla, they were the winner. And this is absolutely crazy. That was the Trump election, the Trump bump. It gained 250% from its lows. But then we had Amazon, Google, Apple, Nasdaq 100, the S&P 500, and Microsoft. In fact, Microsoft underperformed the S&P 500, all things considered. But a very, very strong year for Nvidia, Tesla, and Meta. And I actually own Meta in my own portfolio. Looking at individual names, the best performing stock in the S&P 500 was Palantir, gaining 350%. I thought AppLovin was in the S&P 500, which gained 800%. But Palantir 350% gain. Absolutely crazy. The worst performing stock was Walgreens Boots Alliance, down 65%. And you can see here in second place was Vistra, then Nvidia, United Airlines. Can you believe that? Up 138% this year. Axon up 134, Broadcom 111%. And we actually have two more stocks, Targa Resources and Howmet Aero, both gaining. All of these stocks doubled or more in 2024. Constellation up 94%, Arista Networks up 89%, a very, very solid year for the market as a whole. You can see here's Tesla, GoDaddy, NRG Energy, Tapestry. That's actually crazy when you think about it. After the volatility we saw with the Capri deal in the middle of the year, a fantastic year for these stocks, but not without some volatility. Look at CVS Health, down 44%, Estee Lauder down 49%, a stock I've been looking at trying to get into. Enphase Energy down 47%, Microchip down 37%. So there definitely were some losers here for the year. However, you can't fault the market because we really did put on a show. And looking at other proxies for the market, Bitcoin up 128%, gold was up 26%. Here's the S&P 500. You can see global equities gained 16%, so a great year nonetheless. China gained 15%. Can you believe that? The USD was super strong this year, and treasury bonds actually fell 11%, all things considered. And that is your entire 2024 rack. A great year for equities. And if you were a follower of this channel, you know we said to buy all dips throughout this year. Now, guys, 2025 is going to be a lot more volatile. It's going to be a lot harder to make money. However, we are going to see positive momentum in the year. But let's actually get back to today's trade and what we saw today, because that's essentially what this channel is about, the daily recap show. Now, the best performing sector today was energy. The XLE gained 1.32%, followed by real estate, materials, staples, healthcare, and financial. So we saw a little bit of a value trade here today, a little bit of a value rotation, and we could see a value trade kick off 2025. The worst performing sectors, XLY, XLK, XLC, these magnificent 7 sectors. And you could see that the market really traded in for value and core stocks and sold off these large growth names, stuff like Nvidia, stuff like Tesla. And if you look at this map, right, you could see here that it was sort of like growth for the most part in all size segments as well as large core. They got sold off. The rest of the market actually got bought. And if we actually look at fair value estimates for each factor and size segment, the market actually rotated out of these overvalued sectors today, and we actually moved into some of the more value orientated parts of the market, stuff like large cap value, small cap value, mid cap core. It's exactly the same like this right here. So what was sold today and what was bought today was literally just overvalued stocks versus undervalued stocks, relatively speaking, at least according to Morningstar. So we could really kick off 2025 with a value trade, looking at underperformers and putting money to work there. However, I wouldn't bet against technology, the mega caps, Tesla and Amazon, because they have momentum. The momentum is strong, and you don't really want to fight the trend because the momentum is strong. Now, we actually did see an improvement in breadth. We saw more advances than decliners today, which is really, really great for breadth. And I thought that after one more red day, we would actually lose the 150 and 200 moving average, but that was simply not the case. In fact, we saw slight improvements here in the 150 day as well as 200 day, relatively speaking, on the back of the solid breadth momentum we saw. You could see it in the 100 day. We saw slight improvements as well in the 50 day, the 20 day, and 5 day moving averages as well. So we saw slight improvements from yesterday. And if we continue this trend, we will recapture the shorter term and medium term moving averages. However, longer term averages still looking very, very fragile right now. And while I always say go ahead and buy the dip, especially with these longer term averages still intact, we do have to look at this and get a bit cautious. However, we are seeing breadth improve. And if we continue to see this value rotation in the market, we're going to see breadth improve. And then if we could also get some of the mega caps to participate in that, maybe Google, maybe Meta, we can really see the market kick off 2025 on a great note. But in the year and now, longer term averages looking great. Medium and short term averages are trying to recover. And looking at the charts, guys, we see some very constructive price action across the board. The IWM actually gained today when the big boys, the Nasdaq 100 and the S&P 500 fell. both. However, we are seeing some positive developments here in the after hours. You could see it looking very, very positive. So very interesting dynamics. We definitely did see a little bit of a value trade. However, what we want to see over the next week or so is continuation of that. If we can see that, that will be a signal that we're definitely seeing a positioning into some of the laggards this year, away from some of the tech names, some of the mega caps. And I think that would be really constructive for market breadth as a whole. That being said, it's still an ugly day in the market when the S&P 500 and the Nasdaq 100 are both down, but you have to take everything in stride. The RSP gained, IWM gained, mid caps gained, small caps, profitable small caps gained as well. And that was on the backdrop of both the 10-year and 30-year yield gaining. Normally these smaller cap companies do not that great when yields rise. Yields rose, the dollar gained, and as a result, small caps rose. So today was definitely a positioning trade over anything else. And you could tell that, small caps rose when yields rose as well. But the 2-year yield did fall as well. Bonds fell too. Gold was up, silver was down, mixed price action, and then we saw nat gas fall 6%, but crude gain as a result. That energy stocks still very, very bullish on the back of the developments we saw with the natural gas yesterday. Now, the S&P 500, we did see some developments in the gamma charts. Now, holding this level right here, guys, the S&P 500 holding this level that puts support, which is actually an equal low relative to the last 3 lows we saw right here. And this was the Trump election gap up stocks made after he got elected. So we haven't broken down, and that's really, really constructive. And this probably means if we continue to find support right here, we probably then make a move higher in the S&P 500. However, we are still in negative gamma, so do expect volatility. And what we really want to see is a push off the put support and move higher to retake positive gamma zone or the gamma flip. If we don't get that and stocks then break down, we will close the gap right here very, very quickly. So bulls are doing what they need to do. However, there is still risks being in this negative gamma environment. Looking at the Nasdaq 100, now the put support did actually move down. That's not a positive development. We did close at the lower end of the newly moved down put support. However, the gamma flip and the core resistance stayed exactly where it is. That's positive, I guess, but yeah, things not looking good for the Nasdaq 100. So it's very interesting to see that the Nasdaq 100 actually had some bearish undertones when the rest of the market actually did see a little bit of a value rotation. And then looking at the RTY, nothing really changed. Like the S&P 500, we're holding the put support right here. That's constructive, forming an equal low again relative to this low where we actually did bounce off after the Trump election news. And now we're looking to find support and move up from there. What's concerning me about the IWM though is if we actually go on the weekly chart, you can see that this is the all-time high that we made in the RTY in 2021. We actually failed to break out from this all-time high, and that is not very constructive, all things considered. However, if we can continue consolidating right here, recapture the positive gamma zone, we can then aim for the core resistance and then maybe actually have a close at these highs, which would be pretty much new all-time highs. That's exactly what we want to see. But that failed all-time high breakout doesn't look too constructive, especially when you know the market breadth developments that we've seen on the way down. However, that is looking to change. We just need more momentum on the value side. And guys, to kick off this new year, well, it's New Year's year in Australia, so happy New Year's to everyone except for those in America. However, I did actually buy some stock. I bought some Evolution, guys, Evolution AB. This stock has been a bit of a dumpster fire, but it's growing top line at 13%, earnings at about 15% for the next 2 years, trading at 12 times earnings. And there's just been a ton of regulatory concerns and a whole bunch of other stuff that's seen the sentiment sour. So I've added into Evolution and will continue. Now, it's not actually this name. I actually added into the ADR, EVVTY. This is actually what I bought, sort of around the 77 area, but I will continue to dollar cost average if it does go lower. I plan to build out a position over the next month, something I plan to hold for a good number of years. I think great value, great growth, and it's not often where the fundamentals and technicals come together at a reasonable valuation, and that's exactly what I'm seeing in Evolution right now. So that's stock I bought, but I still like the typical names I'm in right now, guys. PayPal, I love PayPal. Do like Uber, Google, Paycom Software. I'm looking at Estee Lauder right now. That's a really, really good name. And also a name I really want to get into is FICO. Guys, now my fair value for the stock is 1,500. We've seen a huge pullback, and hopefully this can keep going. If we can get to this 1,500 mark here in FICO, I'm a big buyer of Fair Isaac Corporation. This is probably the highest quality stock in the world.
At 1500, I'm a very, very good buyer. However, we do need to see it pull back a little more. And if we actually go ahead and just measure from where we are right now to the 1500 area, you're looking at 21% pullback. This is a very resilient stock. I don't know if we'll see it. However, this is another name I'm really looking to get into, and I will buy at 1500 if we do get there. That being said, guys, the path of least resistance for the S&P 500 is still higher. Same with the Nasdaq 100 and the RTY for equities as a whole. And until something materially changes in the macro environment or the monetary environment, stocks will go higher. Earnings are set to grow. Margins are set to expand. And when earnings are growing and margins are expanding, stocks tend to be very, very resilient and do very, very well despite the year we've had. So in this case, guys, keep holding equities. 2025 will be another great year, although don't expect the same returns we have in 2024.
And guys, looking at sentiment going into the new year, sentiment is still sitting in fear. Fear is driving the market. And this has to just do with the price action we've seen as of late, as well as market breadth. Stocks, commodities, cryptos, even bonds are not acting that well in the last week or so, but it has been a fantastic year. That being said, we are entering the new year, fear well in control and looking like we will enter into the extreme fear zone, especially if the price action we've seen in the last week and a half holds up. But this could be a buying opportunity because we have some great data right here, and it's S&P 500 performance in the first week of the year when the last week of the previous year was either negative or positive. So this past week, it's looking like it's going to be negative, and that is actually a very, very good thing because generally speaking, when we've had a negative last week of the year, like we currently are in 2024, we're sitting at negative 1.15% gains in this period. In the next week or the first week of the new year, we actually see very, very bullish momentum. 15 wins, 5 losses, average return 1.32% in just 7 calendar days of trading. That's 5 trading days. And you could see here, guys, weeks where we gained 1% was 8 from 3, 3% moves or more was 5 from 2. Absolutely insane. So, long story short, yes, the market is not acting that well as of late. Sentiment is in the fear territory. However, if we look at seasonals and other similar analogs, what we really should be doing is really buying the dip, especially for a short-term trade to kick off the new year. However, despite everything we've seen in the market lately, it has been a fantastic year. We've had 57 record highs in the S&P 500. This was the 5th best year ever. 1995, 2021, 1964, and 2017 were the only other years that bested 2024 in record highs in this calendar year, and it has been a fantastic year. If you've been a follower of this channel and a daily watcher of The Daily Show, I have said to buy all dips, buy the wall of worry for everything that's happened this year, and you've been rewarded handsomely despite the volatility we've seen in the last week and a half. And the truth of the matter is, equities simply climb the wall of worry, guys. No matter where you are, equities love to climb the wall of worry. You could see here in 2024, we had, to kick the year off, the Hamas-Israel conflict. We had the unwinding of the yen carry trade. That caused this massive volatile spike right here. We had Fed cuts rates for the first time in 4 years. Biden drops out of the presidential race. The S&P 500 closes above 6,000 for the first time. Trump wins his second term, and the market just continued to rally higher. And it wasn't just 2024, pretty much from 2020, when we had COVID impact the world, the S&P 500 from these lows right here is up 166%. What a fantastic time to be alive, and what a fantastic time to be an investor. But all of this is simply the past. And what we want to do is always look to the future. And ultimately, the big question for 2025 is, will these earnings hold up for the next 4 quarters? Earnings are expected to be stellar, with the next quarter earnings, which we go into from next week, seeing growth of 9.6% year over year for the quarter. Then in Q1 2025, we actually see a sequential growth from this
to 12.8%, then 12.4%, and the third quarter of 2025 seeing 13.4%. Now, will these growth rates hold up? Here's what Adam Parker has to say about earnings growth and looking ahead for the year. Now guys, for those very exorbitant and frothy earnings figures to materialize, we need to see a very robust macro environment. And right now we have a GDP now figure for the third quarter at 3%, 3.1%. That is very robust, well above the blue chip consensus. And this is what you want to see to sustain the growth rates that we are expected into 2025. On the flip side, we also got great economic data yesterday. Housing contract activity, which is pending home sales, jumped for the fourth month in a row as buyers shrugged off elevated mortgage rates and took advantage of higher inventory levels. The pending home sales index, which tracks contract signings on existing homes, rose 2.2% against the consensus expectation of 0.7%. It's the fourth straight month of gains. Pending home sales are up 6.9% compared to November in 2023, and consumers have recalibrated expectations regarding mortgage rates and are taking advantage of the available inventory despite higher rates. This is very, very bullish, and if we do actually see mortgage rates drop from where they are right now from 7% into the 6 handle and maybe towards the end of 2025 into the 5 handle, that would just open up further this part of the market, and then we could see growth rates very similar to what we saw here in 2022, 2021, and this is what we want to see. If we can have residential fixed investment contribute to GDP, this will provide growth into the rest of 2024. Now, something that is on the side of the bulls, particularly when it comes to the dollar and by extension yields, looking at Trump's previous term and election in 2016, what we saw was an initial impulse in the dollar and then lower lows, lower highs, and the dollar continued to move lower into his first term of his presidency. And we're kind of following the trend as well. Here in 2024, since his election, we've seen a huge impulse in the dollar, not quite as strong as 2016. And if history is anything to go by, we should see a top form pretty much in the next couple of months. And then from there, we should see the dollar move lower. And as the dollar moves lower, that's going to improve corporate earnings for the most part. That should also see yields move down. And when yields move down, we should see further housing activity move up, and every other part of the market that's reliant on yields, we should see that ease up and contribute to growth. And that's exactly what you want to see. So a big part of 2025 will be the dollar and yields. If the dollar and yields can move down exactly as it did in 2016, I think we'll have a great year in the equity markets. Maybe not as strong as 2024, but double-digit growth nonetheless. Looking at earnings for the rest of the week, so the market is closed tomorrow for New Year's. However, we are back open Thursday on the 2nd, and we get the 30-year mortgage rate, the initial jobless claims, and then we kick off with global manufacturing PMIs, which then goes into Friday's trade, which is manufacturing PMIs and manufacturing employment. Earnings for the rest of the week, there's nothing apart from Thursday. We just have RGP and LifeCore Biomedical. That's pretty much it. And then that's Q3 done. And then we go into Q4 earnings season. However, guys, if you've made it up until here, thank you so much for watching. If you liked the video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.